Ever heard of the she-wolf of the stock market? Sounds kind of crazy, right? Well, for a lot of people, it turned into a real financial nightmare. We're gonna deep dive into this recent case from India that really shines a light on some of the dangers of these financial influencers. The finfluencers.
Yeah, it's everywhere these days. And this case really gets to the heart of, what can go wrong.
Right. This story is about this woman named Asmita Patel, who called herself the she-wolf. She even called herself the options queen. And she promised people they could get rich quick if they just followed her stock trading secrets.
Yeah, that whole thing about having some sort of inside knowledge that'll make you a millionaire is really attractive to people,
Hmm.
especially if they're new to investing, or maybe they're just not doing so well financially.
And this woman, she built up a massive following online. Like, we're talking over 500,000 subscribers on YouTube alone. Plus, she was all over Instagram and Facebook and LinkedIn. Even X, the one that used to be Twitter.
Wow, that's huge.
Yeah, it's crazy. And it goes even further than that. So she started this company too, the Asmita Patel Global School of Trading, AGSTPL.
Huh.
They offered these courses on all sorts of financial things.
So wait, she went from like social media posts to basically running a whole school for trading?
Exactly. And here's the thing. She was telling her students to sell off their stuff,
Mhm.
to liquidate their assets, even borrow money if they had to, so they could invest based on what she was telling them.
Oh man, that's going way beyond just being like an influencer, right? She was basically setting herself up as some kind of financial guru, like her word was gospel or something. And when people put that much trust in someone, that's when things can get really dangerous.
And that's exactly what happened. I mean, a bunch of people, like 42 of them, they went to the Securities and Exchange Board of India, Sebi, and filed complaints. They said they lost a ton of money after taking her courses and following her advice.
Yeah, I read about this, and Sebi didn't mess around. They banned her husband, Jitesh, and banned their whole company, AGSTPL, from trading anything.
Right. They didn't hold back at all.
And that sends a really strong message. It shows that they're serious about protecting investors. They can come down hard on people who try to skirt the rules.
Yeah, you don't want to mess with Sebi.
Yeah.
And remember that 53 crore rupees they seized, that's over 6 million US dollars. It wasn't just a slap on the wrist. They meant business.
Wow, that's serious.
So this is just the beginning of the story. We're going to get into the specific things she did that led to all this, and more importantly, what you need to know to avoid getting caught up in something like this yourself.
So Sebi's order, it showed just how deep this whole thing went. It wasn't just, social media posts. She had these Zoom meetings, webinars, even in-person events. It was like a whole system set up to make people believe her.
And that's really the key. It was more than just like throwing out tips online. She was building this following that totally believed in her. Like, she said she'd mentored over 100,000 students and that she managed like 140 crore rupees. That's a lot of money meant to make her seem super successful.
Right, like I'm the real deal, folks.
Exactly. But when Sebi looked into it, they found out those numbers were, well, let's just say they weren't exactly accurate.
Yeah, that's pretty typical, They make themselves sound way more successful than they really are. Try to make it seem like they've got some secret club. And some of them even start giving out actual investment advice, even though they're not allowed to. It's all designed to trick people.
It's all about the smoke and mirrors.
Yeah.
And then there were those complaints that started the whole investigation. They really show what she was doing. I mean, she was using all this emotional language, promising people they could be millionaires, be financially free if they just followed her system.
Yeah, it's that get rich quick dream. It's powerful, and some people, they get so caught up in it that they don't see the warning signs.
Yeah, it's easy to get caught up in that.
It is.
And investing, it always has risks, right? There's no magic formula. Anyone promising guaranteed returns or saying they have insider information, they're playing a dangerous game, and usually it's the people following them that end up losing.
Right, right. They're the ones taking all the risk.
And it wasn't just the promises. She was telling people to sell their investments, like the stuff they already had, even to borrow money to invest even more based on what she was saying.
Oh, that's really pushing it.
Yeah. I mean, you probably know you got to spread your investments around, not put all your eggs in one basket, definitely not make rash decisions. But when you've got these finfluencers out there, it's easy to get sucked into one particular stock or strategy, thinking you've found the secret, the thing no one else knows about. This case, it really reminds us to stick to the basics, to be responsible with our investments.
Totally. This whole thing, it really makes you think, right? Like with all this information out there, all these influencers on social media, how do we protect ourselves?
Well, let's break it down. First thing, and this is super important, never just accept financial advice, at face value, no matter how convincing they sound.
Yeah.
Always check the information, look at different sources before you make any big financial decisions. It's your money, you worked hard for it, and you should be in control of it.
Right, right. You're in the driver's seat.
Right. And here's a bigger issue. There aren't really enough rules for these finfluencers. Unlike, real financial advisors, there's no standard, no license they need, no real way to hold them accountable when they spread bad information or do something shady.
It's like the Wild West out there. Not enough sheriffs to keep things in check.
Exactly. And in this case, it shows how important it is to be aware, to educate yourself, and maybe even have, stricter rules to stop people from falling for these scams.
Yeah.
Now, let's dig into some specific red flags, like the things that should make you think twice when you're looking at financial advice online.
Yeah, like we were talking about, those promises of guaranteed returns or saying they have secret insider information, that's a huge warning sign. That's classic scammer stuff, preying on people who just want to get rich fast.
Right. And be careful of anyone who's pushing you to make a decision, like those limited time offers or bonuses. They're trying to rush you, make you act without thinking.
Yeah.
But investing, should be a thoughtful thing. You shouldn't feel pressured.
Yeah, take your time, understand what you're putting your money into, and don't let anyone force you into something you're not comfortable with.
Exactly. And watch out for that whole cult of personality thing. They're flashing pictures of their fancy lifestyle, bragging about how much money they're making trading, trying to make it seem like you're part of some exclusive club. It's all a distraction. Their main goal, a lot of times, is just to make money for themselves, not to help you.
Oh, yeah. At the end of the day, they're running a business.
Right. But, it's not all bad. Social media and finance, there's some good things too. It's made information more accessible. You get to hear different viewpoints. And you, the listener, you have more control over your financial education than ever before.
That's true. There's a lot of potential there.
Yeah, for sure. So let's get back to Asmita's case and look at the specific things she offered to get people interested. Knowing this stuff can help you be more careful online.
Yeah, let's break it down.
One of her big courses was this Masters in Price Action Trading. It promised to teach people how to read charts, spot patterns, and make money from price movements. And price action trading, it's a real thing,
Oh, yeah, it's a legitimate strategy.
Yeah. Right. But it's super complicated. You need a lot of knowledge, skill, discipline to make it work. It's not something you just learn overnight, no matter how good the teacher is.
Yeah, it takes time and practice to get good at that.
Exactly. But her marketing, it made it seem like she was this expert, that she was going to share all her secrets, give her students an edge. That whole idea of having this special, super profitable system, that was a big sell, even though the truth is, to be successful at trading, you need time. You need to practice. You need to really understand how the market works.
It's all about creating that illusion,
Yeah.
making it seem like it's something exclusive and rare so people will jump at it. And it looks like a lot of people did without thinking about the risks.
Yeah, the fear of missing out is strong.
It is.
Another thing she had was this Let's Make India Trade course. This one was more general, aimed at getting more people into the stock market. It was really smart. She tapped into that growing interest in investing, made herself seem like a champion for regular people who wanted to be in control of their money.
Yeah, in India, the stock market is still relatively new, so there's a lot of people who are just starting to get into it. And she made herself seem relatable, like someone who understood their struggles.
It's amazing how she had all these different angles for people with different levels of experience and different goals. She offered everything from technical trading stuff to just basic financial literacy, all to reach as many people as possible. But behind all this talk of empowerment and making things accessible, there was a darker side, something that Sebi's investigation uncovered.
Right, the stuff that wasn't so glamorous, the misleading claims, the fact that she wasn't even registered to give investment advice, all the people who lost money. There's a lot to learn from that, especially as we look closer at what Sebi found.
Exactly. So Sebi's order, it brought some pretty concerning stuff to light. One of the biggest things was that she and her company, they weren't registered investment advisors, meaning they weren't supposed to be doing what they were doing.
Yeah, those rules are there for a reason. They protect people from unqualified advisors, the shady ones who don't really care about their clients, Sebi, they take those rules seriously. They make sure people follow them. This case, it's a warning to anyone who thinks they can just, play around with financial advice and get away with it.
Right, there are consequences.
Yeah, definitely.
And Sebi found that she wasn't just operating without permission, she was actually misleading people. They found examples where she was giving personalized investment advice, even though she wasn't qualified to do that.
Oh, wow. That's crossing a line.
Yeah, that's a big no-no in the financial world. When you give personalized advice, you have a huge responsibility because it could really affect someone's financial well-being. The rules are there to make sure those giving advice are held to a high standard, that they're acting in their client's best interests.
Right. And it sounds like she wasn't doing that.
Nope. And this brings up another important point. When financial influencers make money directly from the investments their followers make based on their advice, there's a conflict of interest.
Yeah, it gets murky.
Right. And it shows how important it is to get advice from real financial advisors, the ones who are registered and legally obligated to put your interests first.
Right. They have a fiduciary duty to their clients.
Exactly.
Yeah.
So Sebi also found out that Asmita was making claims about her own success trading and how much money her students could make that weren't, well, let's just say they weren't true. She was basically inflating her track record to make herself look better and attract more followers.
Ah, the classic fake it till you make it approach.
Yeah, and it works because people want to be like those they see as successful. But investing, it's not always a smooth ride. Anyone promising guaranteed results is probably not telling the whole truth.
Right. It's all about managing expectations.
Exactly. And this, again, it goes back to being skeptical, thinking critically about financial advice online. Don't get swayed by fancy testimonials or promises of crazy returns. Always check the information, make sure it comes from reliable sources before you make any decisions.
Right. Do your homework.
Yep. And another tactic Sebi found was that she was using pressure tactics to get people to sign up for her courses. Limited time discounts, special bonuses, making it seem like you have to act now or miss out.
Yeah.
It's all manipulation, trying to make you make a quick decision without thinking it through.
Oh, yeah. I've seen that before. Creating that sense of urgency.
Right. And when it comes to investing, making impulsive decisions based on pressure or fear can be disastrous.
Mhm.
It's your money. You have the right to take your time, do your research, understand the risks before you commit to anything.
Right. It's your money, your future.
Exactly. And it wasn't just the high-pressure sales stuff. She was also using social media, like Telegram, to create these private groups for her followers. She offered this exclusive access to her supposed insights and trading signals.
Ah, the velvet rope approach.
Yeah, making people feel like they're part of something special. It's powerful. It creates loyalty. And people start to trust the information shared in these closed groups.
Right. It creates a sense of community.
Exactly. But you got to remember, just because something seems exclusive doesn't mean it's true or legitimate. You still got to be skeptical, think critically, even when the information seems like it's coming from a private or special source.
Right. Trust but verify.
Exactly. And this brings up a bigger issue. How do we regulate financial advice in the digital age? Social media, it's great for sharing knowledge, but it's also become a place for misinformation and manipulation.
Yeah, it's a double-edged sword.
Right. On one hand, you have all this information, all these different perspectives. On the other hand, it's hard to know what's real and what's not. What's good advice and what's just hype or a straight-up lie.
It's like, how do you separate the wheat from the chaff?
Exactly. So when you're looking at financial advice on social media, be skeptical. Think about the source, the qualifications, their motives, and always double-check the information from reliable, independent sources before you make any decisions.
Right. Don't just take their word for it.
Exactly. And this brings us to a bigger discussion about technology and finance. The rise of all these fintech companies, online platforms, and of course, financial influencers, it's made financial services more accessible, but it's also created new problems for regulators and investors.
Yeah, it's like we're in uncharted territory here. The rules are changing all the time, and it's important for everyone, investors and regulators, to keep up with all the risks and opportunities that come with this new technology.
It's a brave new world.
It is.
And one way to deal with this is to have regulators and the fintech industry work together more.
Yep.
Talk to each other, try to come up with rules that work and that still allow for innovation.
Yeah, finding that balance is key. Protect investors, but don't stifle progress.
Right. And it's not just about regulations, it's about education too, giving people the knowledge, the skills, and the critical thinking they need to navigate this online financial world. That's crucial.
Absolutely. We need a more financially literate society. People who can make smart decisions, manage their money responsibly, and avoid those get-rich-quick traps.
Right. People need to be empowered to take control of their financial lives.
Exactly. And we've been talking about Asmita Patel's case in India, but this whole finfluencer thing, it's global. It's happening everywhere in different ways.
Like a global phenomenon.
It is.
Yeah.
And it shows that no matter where you are, you got to be careful, be skeptical, and make informed decisions about your money when you're online.
Right. So as we move on to the last part of our deep dive, let's keep this focus on education and empowerment in mind.
Yeah, that's important.
And let's dig deeper into how technology is shaping the future of finance, the good and the bad.
Sounds good. Let's explore how technology is making financial services more accessible. Changing how we invest, manage our money, and interact with the whole financial system.
Yeah. We've got these fintech startups shaking things up, robo-advisors, online investment platforms. It's a revolution, giving people more control over their financial futures.
It's exciting and a little scary at the same time.
It is. It is. But of course, there are challenges with all this progress. We need to look at things like data privacy, cybersecurity, and making sure algorithms aren't biased so that technology makes things fairer and more inclusive for everyone, not less.
Right. We need to make sure it benefits everyone.
Exactly. I can't wait to get into all this in the last part of our deep dive. We'll talk about these challenges, the ethics of technology and finance, and what we can do to create a more just and accessible financial future for everyone.
Yeah, I'm looking forward to it. Should be a good discussion.
So we've been talking about this she-wolf of the stock market, and it's a story that's happening all over the world. It really makes you think about how technology is changing finance and what that means for all of us, for the industry, and for people like you listening.
It's a wild ride, that's for sure. I mean, on the one hand, technology is opening up finance to everyone. You've got these fintech companies challenging the old guard, making investing cheaper and easier to get into. We've got robo-advisors building portfolios for a fraction of what human advisors cost. And then you've got those apps that, turn investing into a game, which is great for getting younger people involved.
Yeah, it feels like we're moving away from that old way of doing things, all exclusive and full of jargon, to something that anyone can be a part of. But like you said, more access, it means new problems too. And one of the biggest is regulation. How do you regulate something that's changing so fast, especially when it's about something as important as people's money?
Yeah, that's the big question. The old ways of regulating, they just don't work as well with all this new technology. And it's not just finfluencers, it's crypto, it's decentralized finance, all sorts of things.
So what do we do? Do we need a whole new set of rules? Or do we just update the ones we have to fit this new digital world?
Probably a bit of both, to be honest. We got to be creative, figure out how to protect people without stopping innovation. Maybe that means rules that are more flexible, based on principles that can apply to any new technology that pops up. Maybe it means regulators, companies, and tech folks working together more closely.
Makes sense. There's no one-size-fits-all answer. And we've talked about education, how important that is, right? People need the skills to think critically, to navigate all this online financial stuff?
Oh, absolutely. Knowing about finance isn't just a nice to have anymore, it's essential. We need people to understand the risks and the opportunities with these new technologies, to make smart decisions about where they put your money, to be aware of the traps that are out there.
Right, it goes back to what we were saying before. Do your research, don't put all your eggs in one basket, get advice from the pros when you need it.
Exactly. Those are the fundamentals of investing smart. And they're even more important now with all this technology where information spreads so fast and it's hard to tell what's real and what's not.
Right. So let's talk about something else that's really important. The ethics of technology and finance. Algorithms, they're playing a bigger and bigger role in our financial lives. And we need to make sure they're used in a way that's fair and doesn't create more inequality.
Oh, yeah, that's a huge one. We've seen cases where algorithms used for things like loans or credit scores have actually discriminated against certain groups, even if it wasn't intentional. We got to make sure technology helps create a financial system that's more inclusive, not one that makes existing problems worse.
So how do we fix that? Is it about being more transparent with how these algorithms are made and used? Or maybe having more diversity among the people who build them?
Probably all of the above, honestly. We need transparency, accountability, and people with different backgrounds and perspectives involved to make sure these algorithms are fair and ethical.
And that brings us back to that fundamental question. Who benefits from your financial decisions?
Yeah, it's something to really think about, especially now with all these finfluencers, these fancy algorithms, these easy-to-use investment platforms. Are you the one who's actually winning when you make those decisions, or are you just making someone else richer without even realizing it?
This whole case with Asmita Patel, it's a wake-up call. Being charming and having a polished online presence doesn't mean you're trustworthy or qualified. You need real credentials, you need to act ethically, and you need to truly care about helping the people who are coming to you for advice.
And technology, it's amazing. It has the potential to make finance better for everyone, but we got to be smart about it. Be skeptical, think critically, and never stop learning.
Well said. So as we wrap up this deep dive, I want you to think about these things. Keep learning about finance, and when you're making financial decisions, do it with both excitement and a healthy dose of caution. Remember, you have the power to control your financial future, but it's a power you should use wisely.